Maybe it's counterintuitive, but you want to make the person who's ahead of you look really, really good without them needing to do very much.
Today, I'm sitting down with Carson. Carson graduated from BYU's Marriott School of Business, and after graduating, he ended up in PCA banking, private capital advisory in Dallas. Carson joined Jefferies several years ago, and since then he's been off to the races, helping Jefferies become perhaps the best PCA bank on the entirety of Wall Street and getting promoted on up to VP in the process. I want to start just at the very beginning of your career.
I was just a very eager kid from Kansas City. Certainly had never heard of investment banking. Getting started, there's always the chicken and the egg problem. Any prospective employer wants you to already have experience, but in order to get experience, you need to already have had experience. I think I sort of woke up the first semester of my sophomore year, realized I needed to get internships under my belt.
In order to source a job in investment banking from a non-target school, like you're saying, you have to go out there, build relationships, and get people to vouch for you.
Anything that's worth doing is worth overdoing, and moderation is for cowards.
How much of your success in investment banking and your career do you think is due to your hard work and skill, and how much of it is due to luck? Welcome to another episode of Wall Street Diaries, which is a podcast about extraordinary individuals who launch their careers on Wall Street and use that experience as a springboard to build world-class careers. We bring you the stories of people who turned their foundations into something remarkable. And today I'm sitting down with Carson, someone whose path represents resilience, reinvention, the power of compounding momentum over the course of a career. Now, I hope you're excited, but I'm just going to give you a little context on Carson because Carson graduated from BYU's Marriott School of Business, where he had incredible grades, like aced a couple of PE competitions and did internships on everything from investment banking to PE and asset management. And so he really saw the whole spectrum of finance recruiting. And after graduating, he ended up in PCA banking, private capital advisory in Dallas. And when Carson did that, I had no clue what PCA was, but he was convinced that this was going to be an incredible bet. And since then, that bet has played out in spades. Carson joined Jefferies several years ago, and since then he's been off to the races, helping Jefferies become perhaps the best PCA bank on the entirety of Wall Street and getting promoted on up to VP in the process. He's become such an expert on the PCA industry that he has been a contributing author on the Jefferies Secondary Market Review for several years in a row, which is the authoritative report on the industry. And so Carson has had an incredible experience in an industry that I know many, many students are looking to break into today. And we're very lucky to have him on the show to pull back the curtain on one of the most interesting parts of investment banking and walk us through what it takes to build a career in investment banking beyond the analyst level. So with that, Carson, we're so lucky to have you.
Thanks, Max, for having me on. I appreciate it. It's always nice to speak with you one more time.
Yeah, absolutely. And so I want to start just at the very beginning of your career and just walk through chronologically from the undergraduate experience, the entry into banking, and how you've climbed the ranks. And so for this first chapter, you're going to be giving us a bit of a sense of how people can understand breaking into the industry, what this industry looks like, and coming from a semi-target school and things like that. And so when you first arrived at BYU back in the day, like, what did you think your career path was going to look like? I'm sure you hadn't really heard of PCA banking, maybe not even investment banking broadly. And so was that even something in your line of sight at the time?
No, it really wasn't. I was just a very eager kid from Kansas City who certainly had never heard of investment banking, definitely not secondaries. I knew that accounting was a thing and finance was a thing. I think I had it in my head maybe that I wanted to be a personal financial planner or something like that because I liked the idea of working with money. But really didn't know and did exactly what I think every student should do, which is just be very open-minded, exploratory, do a lot of internships. Doing a few internships here and there, convinced me pretty quickly that financial planning wasn't maybe the right thing for my future. And then ultimately, I met a very special friend named Max Adams, who told me all about his route to investment banking, and we became fast friends. And I was convinced against my will to commence the recruiting process for IB.
Well, I'll take it. I was glad to meet Carson as well and talk about this thing that I was so obsessed with when I was an undergrad. and I guess maybe all of the talking about the interest, the intellectual intrigue, the prestige, and of course the chance to make a decent paycheck rubbed off on him. But coming from BYU, which Carson and I both went to for undergraduate, which is, I would say, at the time was mostly a non-target, but has become a little bit more of a semi-target for certain banks over time, where there's a few elite boutiques and a few bulge brackets that consistently recruit there. And so, what did that Wall Street recruiting landscape look and feel like for you at that time, going through the process for the first time as a sophomore, freshman, junior, trying to think about banking?
Yeah, it's interesting how the target non-target distinction has kind of changed over time. I mean, I
Mm-hmm.
like consider Jefferies PCA, for instance. We recruit regularly from BYU, from other schools. So it's certainly a place that we consistently go to as a pipeline for students. You definitely have to be proactive coming from a school like BYU. However, I mean, what I'd say that they do very well in two things. The first is really preparing students with the cultural assimilation and the
Mm-hmm.
information to do well in investment banking interviews and processes. So they have,
Yeah.
I think at the time they had the investment banking club. I think it might have been renamed now, but that did a great job of, if you attend that every single week, you could learn how to do the technicals, you could learn,
Mm-hmm.
um, how to go about reaching out to upperclassmen. And then the second thing is the alumni networks, which I think BYU does, as well as any other school. Where alumni really are very willing to, get on the phone to be helpful, to, help you to, understand what the recruiting process looks like at their bank and to be successful.
Yeah. Yeah, yeah. So the information, some of these infrastructures to help you actually understand what the industry looks like and how to get in. But what were some of the structural disadvantages, if any, that you noticed in terms of going to a non-target or semi-target versus a target school? Like, was there anything that you had to fight sort of an uphill battle to overcome there?
Yeah, I mean the biggest thing is that there's no default recruiting pipeline
Hmm.
from
Mm-hmm.
many banks to,
Yeah.
what in reality what are most schools, right? Like every bank has their pipelines that come from different schools, but if you're in a school that's not in one of those pipelines, you have to be a little bit more proactive and creative in order to make your
Yeah.
place. What I'd say though is, I think it's actually a good proxy for what investment banking itself is kind of like. If you have a
Mm-hmm.
client and you're looking to help advise on a transaction for them, or help to create a relationship with them, you don't always have a steady pipeline into that client,
Mm-hmm.
and so you need to be creative. You need
Yeah.
to be somebody who others will give referrals for, right?
Mm-hmm.
And I think it's a good proxy. I think coming from a non-target and the creativity and the gumption that's required to get in
Mm-hmm.
the door, it's actually very similar to I think making client relationships.
I really like what you're saying there, where to some extent, investment banking and private equity and growth equity and venture capital, they're really cool jobs because they force you to do the job to get the job. And so I don't know if that
Right.
exists in really any other industry, but in order to source a job in growth equity, for example, you have to kind of like source companies and bring them to interviews. And in order to source a job in investment banking from a non-target school, like you're saying, you have to go out there, build relationships, get people to vouch for you. And 20 years down the line, hopefully they'll vouch for you in terms of signing you up as the banker for their deal. So one other thing that you've brought up in the past a little bit, Carson, that I think is very interesting is how the pipeline has changed since you were in school. And over the last decade or so, something that I've noticed, and I think you've noticed this too, is that the Wall Street pipeline really has expanded beyond the Ivy League. And part of that is competition from, call it tech jobs and AI jobs and working in other industries that a lot of like the top graduates from Stanford or MIT or Harvard are going to or something. But as a result of that, something that I've noticed a lot is how much more competitive it is to get into some of these internships. And so I think like back when closer to when I was recruiting and when you were recruiting, like Goldman Sachs, for example, had something like a 5% acceptance rate. And then you fast forward 10 years and it's closer to like 0.6, 0.7%. And so to some extent, that's a double-edged sword where the democratization of these finance jobs has opened up beyond these like core schools where people recruit on campus. And so that means that there's just hundreds and hundreds of thousands of people applying. And so for example, last year, I think JP Morgan had like 500,000 plus applicants for like 4,000 positions or something in investment banking. And so even though it has gotten so much more intense, that said, it still was really freaking hard back when you were recruiting for this. And so walk us through the process of getting those first finance internships. Like I remember that you were absolutely a machine at networking. And so what was the technique for getting in front of people and actually building out those relationships so that you can break into this incredibly intense industry?
Yeah, I mean, getting started, there's always the chicken and the egg problem, right? Of
Mm-hmm.
any prospective employer wants you to already have experience, but in order to get experience, you need to already have had experience.
Yep.
What I did, so I think I sort of woke up uh, the first semester of my sophomore year, realized
Mm-hmm.
I needed to get internships under my belt. Um, Parsed the whole junior and senior cohort within the finance
Mm-hmm.
program at BYU on LinkedIn and wrote down the list of 100 to 150 students that I
Mm-hmm.
thought had roles that I would be interested in. Now that ranged from investment banking, private equity, corporate finance. There was all sorts of different internships that
Mm-hmm.
these students had had. I think I correctly viewed those students as being the first layer of connections that I might
Yeah.
build, who might be able to tell me, where it was that they got their sophomore and junior internships. So I
Mm-hmm.
reached out.
Mm-hmm.
I actually got together with a friend of mine. It was somebody else, it wasn't you, who and we. And we printed out sheets of paper and wrote down questions, for each of those students, and wrote out emails asking to connect.
Cool.
And we probably had 50 or so um, different meetings with these students. For me, that was
Yeah.
helpful both in just understanding, what is a corporate finance internship, what is an investment banking internship, but then also
Mm-hmm.
knowing, what were the actual steps that they went through in order to kind of get their jobs.
Mm-hmm. Gotcha. Okay, so you had, 50 plus conversations. You parsed out this entire database. Like that's the sort of hustle that I think gets you a job on Wall Street. Like a lot of students, they don't realize that in fact they do need to reach out to hundreds of people. And in fact, the conversations with alumni or upperclassmen, those are going to be the easiest ones that you have. And so I'm sure after you did that, you went on to go and talk with hundreds of people in the industry itself that had already graduated. And so let's talk about that process next. So you started talking with the upperclassmen, you learned what you were interested in. Then what was the actual investment banking recruiting process like? Like, how was that recruiting? Did you apply for a bazillion different jobs, or did you get lucky with just a few?
I definitely kept my net wide. I mean, I think everybody does. It's important
Mm-hmm.
to do that. I had an advantage where my one of my parents worked for American Airlines at the time, and I actually had some standby flight benefits, and
Mm-hmm.
so I could fly to New York or San Francisco fairly easily. It wasn't a very
Mm-hmm.
cost intensive thing for me, and I had some friends who I could stay with, and so pretty frequently, I think, 4 or 5 times over the course of,
Mm-hmm.
sophomore and junior year, I was in either New York or in San Francisco, meeting
Mm-hmm.
with bankers, asking about their jobs and trying to get connected and kind of on their list of students who they might consider when it comes times for internships. But I'd say,
Mm-hmm.
I think looking back, maybe I'd spread my net a little too wide in the sense that I really think that there's some advantage, particularly for niche product or sector groups, to
Yeah.
developing some level of focus on those groups or expertise. Like, and sitting in the shoes that I'm in now in PCA and secondaries, it comes across very clearly when there are students who are particularly focused on PCA, for instance.
Mm-hmm.
So
Mm-hmm.
I think just looking back, like that's maybe something that I would have changed about my approach, is being a little bit more
Mm-hmm.
focused on, maybe developing
Yeah.
niches that I was more excited about.
Yeah. Yeah. Okay. Gotcha. So the sort of the depth versus the breadth. But I just want to go back for a second. Carson is the guy who literally flew out to the cities that he was trying to recruit for 5 times or something like that during undergrad. And that is absolutely incredible. That is a huge degree of commitment that most people don't do once, let alone 5 times. And so you had this incredible advantage. And I think most students could benefit from copying that, where you get that in person FaceTime that really makes you stand out much more than like a phone call or a Zoom call does. And so I assume that that was probably imperative and to some extent in developing some of those relationships. Is that fair to say?
Yeah, I think so. I mean, at the very least, just having met somebody in
Hmm.
person really increases the chances that you'll be remembered at all, positively or negatively, when it comes time to look through the stack of resumes and pick who gets the super day spots. So,
Hmm.
I think you want to do it tactfully. There's a way to do
Hmm.
it that's not tactful, and you want to be respectful of people's time because
Hmm.
obviously these are professionals that are very busy. But yeah, I mean, I think that was a huge part of my recruiting experience was trying to meet people in person.
Hmm. Gotcha. Okay. Yeah, that's definitely something I've noticed where the students who've reached out to me, and I've had hundreds of students reach out over the years, and the ones who like actually showed up in person were like, "Hey, can I, grab a coffee with you or something like that, or can I buy lunch for you?" Like, obviously, I'm not going to make a student pay lunch for me, but like that sentiment of like I took the time to come out and visit you, and I really, really am interested in your bank, and like I'm making this sign of good faith that I'm gonna like buy you a coffee just to like chat about it. That really does signal intensity and interest in a way that's hard to ask in an interview. But let's zoom back. So during the time when you're recruiting, like the odds of getting some of these jobs is probably like 10% or less on average. And some of the banks that were more competitive were probably way less than that, and some maybe a little bit higher. And so for students who didn't get an investment banking job out of undergrad, but they still know that they want to do it long term, like what advice would you give them on how to set themselves up for a long-term successful career and maybe the path to break into finance or investment banking later on down the line?
Yeah, look, I mean, banking is just one of many different possible career paths that you can go
Well, it's
down. I
not
mean,
the
I think a
only
lot
thing in the
of a
world. Are
lot
you
of
kidding me?
bankers. It's not the only thing in the world. I think a lot of bankers themselves will say don't go into it. So it's like maybe one of the only professions where bankers directly will put up roadblocks for for people
Mhm.
to get in because there's really like
Yeah.
a special type of person that I think we're wanting to join. But what I'd say for those students is, and this is just my general advice for young professionals, is to find something that is technical in some
Hmm.
way. Um, I really think that that is a launch pad to develop
Hmm.
business acumen, to develop your understanding of technical concepts. And it translates very well. If you have learned one technical skill set and you've demonstrated that you've learned that, then I think that translates well, and you can credibly say you can learn others. Whereas if you haven't, then I think
Hmm.
it's just harder to do that, particularly as you get older. So that's my view.
Yeah. Yeah, and you're right. It is kind of a funny industry where a lot of the time they're like saying, don't do this if you don't want to." And I think it's probably one of the only industries on the planet where the people can afford to say that because most industries they're like, like come work for us. We need you. We need bodies. We need people. But investment banking is so popular these days and so competitive that a lot of the times they're saying like, if this isn't a perfect fit for you, like don't waste our time. Like, go do something else. This is a hard job. Realistically, you're going to have a better fit and better experience if you do something that's a little bit more fun for you. And so you recruited very successfully, and I want to jump forward and talk through the second chapter, which is like when you were actually on the job, because that's one of the things that makes you so incredible, Carson. Is like you stuck in banking, you crushed it, and you continue to get promoted again and again to the point where you've really cracked, I think, to some extent, how to succeed in investment banking, where a lot of analysts don't. And so let's fast forward to your analyst years, and I want to hear about the start of your investment banking career. So, what skills or habits did you develop early on that set the foundation for that success of getting promoted to associate and later on VP, and I'm sure many more successes in your future?
It was definitely a learning curve for me starting in investment banking. I mean, like I mentioned, I was just a very overeager kid from KC who had never been around finance or anybody who had worked in finance. So there's a cultural assimilation process that you go through, and that I certainly went
Mm-hmm.
through, where you learn to develop a little bit of polish. You learn to develop the ability to speak with people both internally and externally about complicated concepts. You learn your technicals, how to develop a financial model, perform financial analysis, reading reports in detail,
Mm-hmm.
how to be independent. Um, Most importantly, though, is just how to gain the trust of those around
Mm-hmm.
you. And I think that was, maybe the core thing that I focused on over the
Yeah.
course of my tenure as an analyst is how, for the people who are reviewing my work, how do I how do I gain their trust? I
Hmm.
think a good starting mindset for any analyst to have is that in some ways your work is actually the most impactful for any draft of a presentation because you're the first person doing the draft, right?
Hmm.
And whoever does the first draft oftentimes has the biggest say of what actually ends up in that draft.
True.
And so, the number of times where as an analyst there is a complicated presentation or a complicated model or analysis where I didn't know what the right answer was, but I put my best foot forward and tried to do a thoughtful and strategic job. And my work ended up being directly representative in terms of what went out to the client, and that's a really
Yeah.
empowering thing.
Yeah, yeah, I think a lot of people have that backwards where they're like, oh, like everyone else is actually doing the real work here. I'm just kind of doing the grunt work, dragging around logos on a page. And like, yeah, there's a lot of logo pages and things like that. But there's also this incredible power to have the first say, like you're saying. And it reminds me of like I've taken some negotiation classes at Stanford and stuff, and they say that the first person who speaks and like who comes up with a plan for how to get a deal done is the one who like generally gets close to that because then everyone else is just reacting to it and incrementally shifting what the original plan was. And so as an analyst, like you get to shape it. And a lot of analysts don't really take that responsibility very seriously. They don't really care. They're just getting something off their desk. But I think that that was something that you uniquely excelled at and that I saw and I heard about and experienced. And so what were some of the habits or systems or behaviors that supported that? Because it's very hard to have that time to think and to care enough to think if you're getting so overwhelmed because you don't have those good habits, you don't have the organization from those systems, you don't have the good sort of like banking hygiene to figure out how to accelerate your career and be thoughtful like that.
Yeah, there's a big learning curve. I think for me, one of the most important things was developing a very thorough to-do list and a very
Mm-hmm.
thorough mechanism for triaging the work tasks that came to me. You're going to have your very urgent items that this needs to be done yesterday. We've got a
Yeah.
presentation in 30 minutes, and you're still trying to make edits to the PowerPoint or whatever you need to do to print it out and send it before the meeting, and that definitely happens plenty. Lots of
Mm-hmm.
stories of that. Um, and you have to triage those alongside longer term projects that sometimes it's hard to pay focus to, but over the course of your analyst career can really help you to make an impact on the group
Mm-hmm.
that you're in. I think one thing that characterized my analyst period is I tried to pay a lot of attention to the things that 3 years from now or however long people would still
Mm-hmm.
care about. It would still
Yeah.
make a lasting impact to the group. As it
Hmm.
so happens, I'm still here, almost 7 years later, and there are things that I did as an analyst that still stick around. I think one of the most remarkable for me was we had this back at my former firm. We had this model, this fund model that was built. I mean, it was probably built originally in like 2015 or something like that. It was just a
Yeah.
very very old model, and it was very clunky. It was just more comprehensive than it needed to be, and I got so frustrated with it once that and this is as a in my first year as an analyst, I took the
As a
weekend
first year
and I
analyst,
was like,
you had the guts
as a
to
first year
change it as a
analyst,
first year analyst. Wow.
I'm going to just go rebuild this model from scratch uh and then I'm going just for my own personal like edification. I want to have a cleaner model, even if I don't do anything with it. At least I understand it.
Well, and so I think people are probably underselling yourself here a little bit, Carson. I don't think people understand how insane it is that as a first year analyst, like literally just fresh on the desk, wet behind the ears and stuff, you were going out and actually redoing the entire fund model for the firm. And so that's just like an incredible amount of initiative and thinking forward that a lot of people get lost in the urgent day-to-day tasks and they never actually do anything like that. So that's really, really interesting. And I want to hear next about something you just alluded to, which was the transition to Jefferies. So what was the story there?
Yeah, it was a I mean it was a really unique situation. So at my prior firm, we had what was one of the largest secondaries advisors on the street. Certain senior bankers decided to leave and go to Jefferies. I think in part due to the very strong financial sponsors group that we have here at Jefferies, but also just the culture. I mean, Jefferies has been a bank that's been growing. It's a fully
Hmm.
integrated platform that has a lot of different touch points with sponsors. I think
Yeah.
all of that was very attractive to them. And the entire team in the U.S. was effectively had a decision to make,
Hmm.
either to leave and go to Jefferies, or to go elsewhere. And for me, I had grown to appreciate the team that I was with. I liked them. I liked Secondaries, and so it made sense for me to stay. Ultimately,
Hmm.
I'm glad that I did. I mean, starting Jefferies PCA. I mean, I was an analyst when we moved
Hmm.
over. I think I had a year and a half of experience, and it was like joining a
Yeah.
startup in some ways. We had
Cool.
20 of us that came
Hmm.
over, and we were building things from scratch, and we were
Yeah.
developing client relationships, and obviously we had the benefit of the full extent of the
Hmm.
relationships of some of the seniors, and we had the branding still from the kind of legacy team at my prior firm. But it was very exciting over the course of the last, I guess it's probably been a little over 5 years now, that we've been building Jefferies Private Capital Advisory. We started with 20 people, and I think we're now nearly at 100 people. So we've
Wow.
almost 5x'd in size, and that's not including
Wow.
our private funds group, which increases it even further. So it's really been an exciting ride.
Wow. Okay. So just to recap, like this is a unique situation where a lot of people don't get the chance to work in banking and also feel like they're able to build something like a startup. And so some of my friends and my clients that I've helped get into investment banking over the years who have joined some of these startup banks, whether it's either like an actual startup or it's like a group within a much larger and much more branded platform that grows over time, they kind of get the best of both worlds. They get to build something, they get to work on interesting deals, they get the support of the larger organization and also the entrepreneuriality of it, which you clearly thrived on having the initiative to like build new fund models and build those relationships and help build the materials and the processes from scratch alongside the team. And so, really love that. That's an incredible experience. And so, this process of switching banks like you did though is also a point of concern for a lot of students. A lot of people are like how do I lateral, like what happens if my bank gets acquired, what happens if I get fired, god forbid. And especially at the analyst and associate level, I think people would be curious to hear how it impacts your day-to-day job and to what extent you think that that can be a positive move or a negative move sometimes.
Well, look, the first thing to say is if you're looking to lateral, and particularly if you work for any of my competitors, please give me a call, and and we can talk through that. In reality, I'm like the worst person to answer this question. I mean, I've been with the same exact team members for the
Hmm.
last 7 years or so. Um, However, I would say even with the same team members, there are different cultural feels.
Hmm.
Jeffries relative to maybe my prior firm or others on the street is very collaborative, and you can just feel that. I felt that from day one when we would be
Hmm.
interacting with the sponsors group, or I sit with the tech group in San Francisco, and it's a very collaborative feel. Everybody's looking to help each other.
Hmm.
Nobody's sharp elbowed, and I think that's very much
Hmm.
appreciated. Ultimately, like when you're thinking about whether to lateral or not, just think about your team. Do you like working with this set of people? Because you're going to be doing that a lot, right? You're going to
Yeah.
be spending an inordinate amount of time with your colleagues, and so you don't want to
Hmm.
spend that time if you don't like your colleagues. So I think that's an important
Yeah.
factor.
Yeah, yeah, yeah. And well, and I think one of the reasons that Jeffries, at least from the outside perspective, I don't know too much about it because I haven't worked at Jeffries, but having seen it from the outside, it seems like it's able to be collaborative in part because it's growing so fast. And so because there's this incredible momentum,
Right.
it's like there's not a scarcity mindset like there is sometimes with other banks where the deal flow is shriveling, people are fighting over like the attribution and things like that. And so from my perspective as a coach, seeing my students talk about Jeffries over the years, like 10 years ago, they would have said a very different thing than they said 5 years ago than they said today. And that I think has been a really impressive momentum to watch as Jeffries has become, you know, we can debate the nomenclature. Like I would say probably at this point getting close to a bulge bracket bank, if not, and it probably deserves that title more than some bulge bracket banks today, which is a really interesting transition. Is that fair to say? Like, if you feel like you've seen that at all over the last 7 years?
Yeah, I mean, I think Jefferies was already on that well into that that transition when I joined
Mm-hmm.
5 years ago. It's an incredibly professional organization. It's a full service investment
Mm-hmm.
bank, and I think the most important thing for me is that Jefferies provides basically every possible service that you could provide to sponsors. From
Mm-hmm.
leverage finance to M&A advisory, to secondaries, to private fund advisory. I mean,
Mm-hmm.
we service sponsors at every turn, and that
Mm-hmm.
is extremely important. And it really sets us apart. We can talk about what it is that sets Jeffries PCA apart specifically, but it's that fully integrated approach that we provide for sponsors, and then also for LPs and for every other client that we have that I think makes it special to work at Jeffries.
Yeah, yeah, for sure. And then one other thing that I think is super interesting about your career is just like the fact that you're still in banking. Like, I personally fell prey to this mindset that a lot of analysts have, which is like, oh, you hit on the desk, and then like headhunters start reaching out, and you've got to go to private equity. You've got to go to private equity. You've got to switch over. You've got to leave after 2 years. Analysts two and out. And so this is like probably not a super uncommon thing. Like, I'm certainly not the only person to have that mindset. But it was interesting to hear your perspectives over the years as you decided to avoid that. And you said, no, actually, I think that this is really interesting to stay specifically in secondary, specifically in PCA, and specifically in banking. And so talk me through that thought process that you had about why not transition to the buy side.
Yeah, I mean, I think that there's a lot of very interesting things about staying on the sell side, particularly as you get more tenured. I think the thing that I like the most about being on the sell side is just that, in any large, complicated transaction, there's going to be one single person who has the most comprehensive, full picture of what's going on. And you guessed it, that's going to be whoever is the deal lead from the
Yeah.
advisor, from the sell side lens, because you're speaking with the client frequently. You're speaking with each of the buyers, right?
Mm-hmm.
The buyer really only has just their filtered lens. Sometimes they're not even speaking with the seller, right? you're
Yeah.
you're just speaking with the broker, and so you have a very filtered lens of what's actually happening
Mm-hmm.
in the transaction. So I think uh, the other aspect of being on the buy side is you're going to make a lot of shots, and some of them are going to land, and most of them are not, probably, right? And that's just the model, and so you have to be okay with that as as an associate or as a VP at a private equity firm or a secondaries firm or whatever it is. You have to be okay that most things that you work on aren't going to close. Whereas on the sell side, I know it's certainly not the case that everything closes, but a much higher percentage of the things that you work on are kind of meaningful or
Mm-hmm.
going somewhere. Now, I could see if you're constantly pitching for business, and that was the bulk of everything that you did as a broker, and there's certainly a place
Mm-hmm.
for that, then
Mm-hmm.
then that might be
Yeah.
different. But at least there's quite a few brokers you might work at where that's not the case, and as Jefferies PCA is one such example where you get a substantial amount of execution experience,
Mm-hmm.
and on things that will actually close.
Yeah. Okay. Gotcha. 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 So I feel like at this point I've got a pretty good sense of the investment banking analyst years, about what your experience looked like, how you were able to build on that success, and why you decided to ultimately stay. And so the next thing that I'm really, really thrilled to be talking with you about is the world of secondaries, because a lot of students over the past, I would say, probably even the last 3 or 4 years in particular, have started saying, "Hey, Max, like, I want to get into investment banking, and specifically, I want to work in PCA, private capital advisor. I want to work in secondaries. I want to work on these other types of deals." And so, for those of us who are like weren't familiar with this, like, walk us through what is PCA, like what does that actually look like? What do you do on a day-to-day basis as a PCA banker versus like a traditional like M&A investment banker?
Yeah, happy to provide that color. I didn't really know that much about private capital advisory when I started. I do think I had a sense that there were a lot of private equity firms that had raised a lot of money, and that was really starting to expand, and that there was going to likely be a reshuffling of the LP base, over the course of the next 10 years, as there were just more and more private equity firms in the landscape. expanded and expanded, and that's certainly been true. So at its core, everything, literally everything in secondaries is driven by the fundamental liquidity problem that private
Hmm.
assets have, where
Okay.
fund managers will raise capital for a fund, they'll invest that into private assets, but it's not that easy to withdraw your capital. And LPs in those
Hmm.
funds may want to receive their distributions faster than the GP wants to provide them or is able to provide them. So in secondaries at Jefferies PCA, we really work on two primary types of transactions: LP led transactions and GP led transactions. And
Hmm.
so think of this as, you know, for our client, which
Hmm.
kind of type of client are we working with, who is leading the process?
Yep.
If it's an LP, then typically that sits in the realm of we're doing a fund transfer. So they have a fund interest or several a portfolio of fund interests, and they want
Mm.
to divest those
Yep.
interests or a portion of them to another buyer. From the GP led side of the coin, that typically means we're working with a sponsor or a private equity firm. And there's a variety of different transactions we can do for them. A very
Hmm.
common one are continuation funds.
Yep.
I think the simplest story for a CV is if you have an asset that you really quite like,
Hmm.
it's performing
Hmm.
very well, and maybe it's past the time where your LPs are ready for liquidity, but
Yeah.
you as the manager continue to feel like a buyer of this asset. Then rather
Mm.
than sell it to a third party at whatever discount rate is available in the market, you may want to create an SPV and transfer that
Mm.
to the SPV that you manage,
Hmm.
giving your LPs the option of whether they want to
Yeah.
take their
Yeah. Yeah.
liquidity or if they want to roll. There's a variety of other transaction types that we do as well, but they broadly fit within those buckets.
Hmm. Okay, gotcha. So you're speaking like a true expert here. You just gave us a ton of detail. Simplify it for us in one sentence, like what is PCA?
It's driving liquidity for private markets.
Driving private liquidity for private markets. Okay, I love that definition. So from my understanding of it, it's coming from this concept that PE firms, private equity firms, they raise these massive funds, they buy private assets, and it's hard to sell them, and therefore the PE firm, aka the GP, the general partner, needs to get money back to the people that invested in the PE fund, aka the LP, the limited partner. And so there's this complex ecosystem. You need bankers to facilitate that. And so, in terms of understanding like who your clients are and what types of liquidity or strategic challenges they're trying to solve, you talked about like continuation vehicles, but give us a few more examples. Like, who are your clients in private capital advisory, and what types of liquidity and strategic challenges are you helping them solve?
One example is a pension that I've done work with, and this is a very common story in the market right now, that's over allocated to private equity as an asset class. A lot of pensions have become victims of their own success. They were kind of the original backers of private equity
Hmm.
in its day, and some of their allocations have really grown and expanded to be significantly higher than
Hmm.
even billions of dollars higher than kind of what they intended. So I've done work really with multiple pensions to help reduce their
Hmm.
allocation to private equity. We have like I mentioned, GPs that have assets
Well, and
that they
just to
really
clarify on
like
that
that
point
have
first,
yeah,
if I can step in for a second, then I want to hear about this next example. It's like
for sure.
basically when you are an LP, like a pension fund, it's you're trying to make sure that you've got an equal portfolio in the same way that you and I have our own investment portfolios between like real estate and bonds and stocks and things like that. And so this is a trend that I've seen a lot of times working in PE is the funds in PE return more than the markets, and therefore like the slice of the pie that is PE grows. And so you're saying that you help them get rid of some of that pie to be more normal, quote unquote. Am I understanding that correctly?
Right, right. Yeah, if an asset
Okay.
outperforms and you start with it, you give an allocation in mind, then you're going to eventually need to divest that asset, or you're going to need to become comfortable with that asset just continuing to be larger than you want it to be. So,
Hmm. Gotcha. Okay, gotcha. Didn't mean to interrupt, but yeah, I'd love to hear some of these other examples you were mentioning.
no, that's really fine. Maybe one other that I'd mentioned that's become kind of a hotspot lately are fund tenders and tender offers, which is kind of a cross between a GP-led and an LP transaction where you work with a fund sponsor. And this works best when they have a large fund base, a
Mm-hmm.
substantial amount of NAV, and investors that are ready to start receiving liquidity from that fund. And what you can do is rather than going individually to each LP and having them run their own transfer processes, you can conduct a
Mm-hmm.
private tender offer where you go out to every LP in the fund and give them the option for liquidity. In tandem with that, you can also have them commit the buyers coming into this vehicle. You can have them commit to the GP going forward and establish an ongoing relationship, which I think is really beneficial for all parties. And then, the other examples are CVs, which
Mm-hmm.
continuation vehicles, which have become extraordinarily popular over the last 5 years. I mean, by the time I started in private capital advisory, there really were hardly any. CVs. I mean, the volume from LP transfers vastly dwarfed anything that was done in continuation vehicles. And
Mm-hmm.
nowadays the question is like what asset can't have a continuation vehicle done on it, more so, and it's become a very regular way approach for the market. That's so really any time that a sponsor is considering exit options for a given asset, particularly those that they like, a CV is now on the table.
Gotcha. Gotcha. Okay. So we've talked a little bit about like what PCA is and like some of the different examples here. A question that we definitely need to get out there though is like why build your career in PCA? Why would an analyst who comes to me today, like why are so many students coming to me and saying, Max, can you help me break into PCA banking? Like what's the draw?
Yeah, I mean, the first thing is just the growth of the market, and that's led to an environment where a lot of people have made careers and made very successful careers in private capital. I think people are very enabled to take on new responsibilities in a way that maybe you're not if in a group that's not growing quite as much. I was talking with an analyst the other day who was just talking about all the things that they're able to do and the responsibility that they're able to take. And I was saying, really, in my career, I don't know that I've ever seen somebody who is able, is capable and able to take on additional responsibility, not be enabled to do that. So I,
Yeah.
I don't know whether that's more a function of working at Jefferies or if it's more a function of working in a growing market. But
Mm-hmm.
it includes both. Um,
Mm-hmm.
the other thing that I'd say is that uh, working in secondaries, because it's new to some extent.
Mm-hmm.
There's plenty of times that you're working with GPs that have never had a secondary before in their
Mm-hmm.
history. It's a dynamic part of the market, and you're to some extent figuring things out
Yeah.
as you go. There's been quite a few instances where maybe we're putting together a model, or we're trying to figure out how to handle a very tricky or nuanced situation, and we look at what precedents that we have, and there's really none. You're having to figure it out from ground zero,
Yeah.
based on first principles, and that's something that's very exciting. So
Yeah.
in some ways that we're architecting still the
Mm-hmm.
nature of the secondary market, and the market still is expanding and growing, and so every year you see new structures and new teams and new ideas coming into the market, and it's a very exciting
Mm-hmm.
place to work.
Wow. Yeah, no, I'm very intellectually intrigued personally, where that does sound like a ton of fun to me as someone who likes to use my brain as I'm thinking about finance concepts and building financial models and stuff, just to like think about the creativity involved almost. And so I understand
Yeah.
why so many analysts are interested in it. Like from my perspective, people are excited about PCA because it's like intellectually interesting. A lot of students are just super attracted to the growth that you were mentioning, where it's in some ways there's a tailwind in building a career in banking where you're just going to be more likely to succeed. You're going to do more deals. You're going to have a more successful career if you choose to join a segment of the market that's growing instead of something that's like totally belly flopping. And so it's kind of common sense. But the other reason that I think a lot of people are interested in PCA, and I know this doesn't apply to you, is for those who are interested in going to the buy side eventually, it kind of gives you unparalleled insight to a lot of these private equity firms and a lot of these buyers. And if you ever want to go work at an LP, it gives you those relationships. And so students are crawling all over this these days because I think they see that potential and that interest. And so, what advice would you give to a student today if they were to call you up and say, "Hey, Carson, like, how can I break into private capital advisory?"
Yeah, I mean, I think the most important thing first is just to gain a very basic understanding of what it is. So, listen to
Hmm.
this podcast, go on Wikipedia, read the market reports that we put out. I know Jefferies, in particular, does a great job of putting out a market
Hmm.
report every 6 months. I've contributed to those for quite a while, and so read what we're writing and what we're saying about the
Hmm.
market. Um, Go on ChatGPT or whatever your favorite AI platform is, and ask it about secondaries. I've found that it actually has started to do a pretty good job
Hmm.
recently in telling you about it. And then the next thing is to reach out and connect with professionals in the market.
Hmm.
I'd say be tactful about how you're doing it, tailor your introductions. But
Yep.
it's certainly I think given how fast the market is growing, I think you can expect that there's going to be a lot of new analyst positions going forward, and still a great opportunity for many more people and young faces to make careers in the secondary
Hmm.
market. So, I think those are kind of the first steps. And the other thing that I'd say, and this is, it kind of depends on who ultimately is interviewing you, but I think it's helpful to understand the basic mechanics of a fund waterfall, right? I think you should understand what carried interest is. I think you should understand what management fee is, what the hurdle
Hmm.
rate is, what the GP catch up is, and how those all interact
Hmm.
together, and be able to answer questions about them. Now, are you going to get question? I don't know. It'll depend on who the
Hmm.
interviewer is, but I think that understanding some of the more technical nuances
Yep.
as a college student, it's like one of the best times to
Hmm.
go and understand that and drill that in.
Yeah, yeah, yeah. Well, and you just said a bunch of words there that, frankly, I still have a hard time sometimes wrapping my head around the complexities of these waterfalls, even after building fund waterfalls from the inside in private equity. And so that's something we'll have to get you back on to explain a little bit more detail at some point. But tell me a little bit more about Jefferies specifically, because a lot of my clients, they do say that Jefferies is like one of the top, if not the top investment bank in secondaries these days. And like I was saying, it's grown rapidly in a rapidly growing industry. And so it's kind of just a recipe for success. But am I correct in remembering that Jefferies has done over $20 billion of LP volume specifically in 2025 alone so far? And like, if so, what's driving that macro growth?
Yeah, that's right. And I think we've done collectively more than 50 billion as a team
Wow.
just in 2025 alone, which is really kind of insane when you think about it.
Yeah.
Um, I mean, that's larger than the entire secondary market was just a few years ago. Um, I think Jeffries has done a few things very right. I think on the GP led side, which is definitely an important component of our business, we have approached the market in a fully integrated way. Some of our competitors, I think, will focus on this market just with the private capital teams,
Hmm.
and that approach works sometimes. But what you miss out on is the deep insight that you get into the underlying assets, particularly for
Hmm.
single asset continuation vehicles, um,
Yeah.
when you're actually building sims and marketing them. Because the reality is, for most private capital advisory bankers, you're a generalist, right? You're a product specialist in the secondary market. And we found that approach has really resonated with
Hmm.
sponsors, and it's led to substantial market share gains
Hmm.
on the GP led side. Um, on the LP side, what I'd say is we never deviated from our roots. Our roots
Hmm.
come from the legacy Cogent team, who exclusively focused on LP secondary market transfers, and built a career and really built that market. And we've not deviated from that. That's we still have a very large team that's exclusively focused on LP secondaries, and that's a major focus for us. Others, I think, have become distracted from the LP secondary market, and
Hmm.
have focused on
Yeah.
the GP led market. Um, and both really are quite important. And I think what we find is that there's a flywheel effect of information that comes when you are deeply embedded across every aspect of secondaries, that makes it so that a new GP or a new LP so frequently chooses Jefferies as their partner and advisor when going about a new secondary transaction.
Fair enough, fair enough. And so, what about the macro trends, though? Like we've discussed personally some of the other things earlier, like the growth in PE, and that's driving a lot of like the liquidity problems. But talk to me about some of the other things that are driving this market right now.
Happy to do that. I mean, fundamentally, like we're market makers, right? So there's the two
Mm-hmm.
sides of the coin. There's the sell side, what's driving sell side demand, and then there's what's driving buy side demand.
Mm-hmm.
Um,
Hmm.
the single most important factor for sell side demand is just the lack of distributions that are
Hmm.
coming out of private equity and other asset classes. And so the amount of older tail end funds in the market, it really just
Mm-hmm.
continues to grow.
Yeah.
Private capital generally is expanding, but it's not exiting at quite the rates that
Mm.
you'd like it to.
Yeah.
Everybody's waiting for the mythical time period when M&A and IPOs are coming back for private equity sized firms, and maybe that will happen soon. But in the meantime, we have the secondary markets to provide liquidity for LPs that want it from businesses that are performing in many cases, but just don't aren't being exited. So that's on
Mm-hmm.
the sell side. I think is primarily groups just wanting liquidity. On the buy side, there's really been a massive amount of growth in dedicated secondary
Mm-hmm.
capital. So these are
Mm-hmm.
funds that are specifically targeting the secondary market and
Yeah.
specifically targeting LP or GP led secondaries. Um,
Mm.
as a result of that, there's been increased competition that tightens underwriting, lower cost of capital, better prices. All of that is quite good in
Yeah.
terms of bridging the bid ask spread. Very
Mm.
importantly, there's also been the rise of retail capital in 40 Act funds. Um,
Mm.
uh, so, that within 40 Act funds, there's quite a lot of
Sorry,
capital
what
that's
is a
kind of come
40 Act
into the
fund for those
market,
of us who aren't familiar with this legislation? Just break that down for a second.
right? So 40 Act funds are perpetual funds that they can have a portion of their assets invested into by private equity. Um, and the goal with 40 Act funds is that liquidity is kind of more accessible. And so you can have inflows and outflows on a more regular basis. And it's accessible to retail investors, not just
Mm-hmm.
pensions and endowments and
Gotcha.
foundations.
Mm-hmm.
So you have a massive number of RIA clients
Yeah.
who are going into 40 Act funds and are now able to invest effectively in secondaries. Um,
Mm-hmm.
that has really driven market volume over the course of 2024 and
Mm-hmm.
2025, where we saw
Yeah.
this massive surge because what you'd have, and this would happen all the time. We would get a call from a buyer in the market who has a 40 Act fund. They would say, "I've got 500 million that I need to I need to deploy." And
Mm-hmm.
the nature of 40 Act capital is very different from traditional closed end funds that call capital only when it's time to call. Because 40 Act capital is burning a hole in your pocket. You receive
Mm-hmm.
the cash right up front, and then you
Yeah.
need to invest it. And so there's a strong incentive to deploy quickly. Um,
Mm-hmm.
uh, that is continuing to drive market growth from the buy side, tighten underwriting, and
Mm-hmm.
ultimately lead to more sellers being willing to sell because the prices are higher.
Mm-hmm. Yeah. Okay. Makes sense. And so that's very interesting that there's two sides of the market. Both of them are sort of pushing at the same time. And so I guess it's no surprise that the overall market is growing dramatically. And so this has been extraordinarily interesting to hear about like what PCA is, learn some of the things that you need to actually do to succeed as an analyst there, and about Jefferies and sort of the transactions that you might work on, the types of deals. And so the next thing I'm just very curious to hear about from you, Carson, is the transition to sort of mid-level in banking. And so a lot of people, like I was saying, they leave after a couple of years as an analyst, they leave after a couple of years as an associate post-business school, and it kind of is a pyramid. And so there's fewer and fewer people at each level. And I'm really curious about how that progression has gone. And so what were some of the key inflection points in the trajectory from analyst to associate to VP, all the way back from like your internships in college?
Right. Well, let's just forget about title for a second and just think
Hmm.
about actually managing a transaction. There's a
Yeah.
point in time where at the kind of associate VP, SVP role, you need to learn to be able to take responsibility for all of the execution components of a transaction, right? So I'll
Hmm.
call that being a deal lead, right?
Yeah.
On a transaction. Um, I think I felt that I had the goal of learning and enabling myself to become a deal lead as soon as possible into
Hmm.
my associate years. So I think I was an
Hmm.
associate one at the time, or I forget if it was associate one or two, when the VP who I worked very closely with ended up leaving the
Hmm.
firm. And so it was
Yeah.
just me and the managing director on several large transactions, and I was slotted in to be, the person who needed to take over
Hmm.
for the VP in the deal lead role.
Hmm.
Now the managing director also has an important function, and
Yep.
but they're primarily focused on sourcing business, and then will come in when there's issues or challenges in the transaction to
Yeah.
help handle them, right? So as
Hmm.
an associate, I was thrust into that deal lead role for these new transactions upon my VP leaving.
Hmm.
That was a great experience. I felt like I was able to dig deep and really
Hmm.
try to create a good experience for our clients, create a good outcome. Thankfully, everything did go well and successfully closed those transactions. And by that point in time, if you've demonstrated that you can be the person, the deal lead and execution lead for a complex
Hmm.
transaction,
Yeah.
and when issues come up, that you can learn from that and learn in real time and handle them, then you're much more likely to be put as deal lead for future transactions. And so, I think that helped ultimately to receiving, a promotion to being VP, because that's one of the core roles of being a VP is being the deal lead. The other
Mhm.
thing that I'd say is just like as a associate VP, uh, one of the really core necessary items for you to progress is receiving positive feedback from clients,
Mhm.
uh,
Mhm.
developing relationships with clients, and showing, most importantly, that you can win the trust of the clients that you work with. And I think some of that really requires you putting your own interests away for a few
Yeah.
years, and truly trying to think like, what is it that my clients actually need, and what's the right advice to give.
Yeah.
Uh, because particularly during the associate VP years, those are your periods to start
Mm.
developing early
Mhm.
relationships with people who are early in their careers at the clients that you're working with. They'll
Mhm.
continue to progress, and they'll become more senior themselves and go out to
Fair.
other firms too, and that's how you develop your network. But I always felt, we can talk about what sourcing looks like, but that I always felt like that was the most important sourcing mechanism is, what is my last client and referral look like, and
Mhm.
how do they think of me, and
Mm.
would they do business with me again?
Yeah. Yeah. So sort of like what your net promoter score is. And so
Right.
what I'm hearing from you, Carson, is that there were some inflection points where you had an opportunity to take responsibility. And at those points, they could have brought in someone else to like do a job that you weren't capable of doing or weren't interested in doing. But instead of letting that happen, you worked upwards and you actually just did the job yourself. And so I think that's incredible advice for anyone, regardless of whether you're in secondaries or whether you're in a different area of investment banking or private equity or finance, is just try to do the job of the person above you. And honestly, that's one of the things I love the most about coaching is helping students after they get into investment banking to think like that and to think about how to take those next roles. And so at Wall Street Mastermind, our goal isn't just to get people into jobs. Our goal is to get people to succeed in careers in finance long term. And part of that is getting a job, but part of that is teaching how to think about those next steps and think about how to build those relationships with clients and think about how to just really work upwards along the chain of a career in finance. And so it's really fulfilling to me as a student when we see someone from Wall Street Mastermind go and decide to stay in the industry and get promoted and things like that. And so, what does that mean to you, though? Like, as you've seen this progression and you've gone from analyst to associate to VP, like, What does that mean to you?
Yeah, I mean, so I guess one clarification that I'd make too around this, because there is balance here where you're wanting to do the job of the, or at least be able to do the job of the person
Hmm.
ahead of you. I think what I'd say is the way I would frame that is you want to make the person, and it's not just because I'm a VP that I'm saying this, but you want to make the person who's ahead of you look really, really good
Yeah,
without them
yeah,
needing to
yeah,
do very much, right?
exactly.
Maybe it's counterintuitive. Maybe that feels self-serving
Uh-huh.
for me to say that right now. But that was always my approach is trying to think as an analyst or as an associate. How do I make the person who's the next level up from me feel like they can focus on other transactions that they're working on right
Exactly.
now, and that I will make them look good in front of
Hmm.
their whoever's more senior. What you don't want to be doing is being sharp elbowed or
Hmm.
trying to take work that others are doing
Hmm.
and trying to do it yourselves when actually they want to be doing it. One like very consistent lesson that I've found over time is inevitably there will be periods where you need to step up and be the one to
Hmm.
do the work, and there will be those opportunities. Somebody
Hmm.
it always happens when people are taking vacation, honestly, is what happens is the
Hmm.
person immediately above you takes vacation and you have the opportunity to show that you can do the work. um,
I
so
can see
yeah,
that.
so you asked,
Go
sorry,
for it.
what
Sorry.
was that? Oh, I was just saying, you asked uh what does that mean to me, um professionally and personally. And I think what I'd say is like the reality is that the investment banking is hierarchical, right? It's some people I think resonate with that less than others, but it's true. And I think it is it's actually like a very well functioning, well oiled system that works pretty well. And as you grow in the kind of ranking, the analyst to associate to VP, what it really means for you is that you have more agency in your career.
Hmm.
You can take risks. You can decide where you want to spend your time in a way that will best optimize the benefit of the firm and of your own career. That's really interesting and exciting. I think a lot of people are hesitant about banking because maybe they feel like it doesn't have as much agency, and I totally
Hmm.
disagree. I think it's really a function more of gaining agency over the course of your career, and over time you really have a lot of flexibility of where you can spend your time and how you can try to create value, and what creativity you can bring to your deals, to sourcing, and to kind of the whole investment banking model.
Love that. Yeah. I think that's a common misconception as well. And I just want to return to that brilliant point you said about the vacation side of things. And so I think we could write an article called "How People Taking Vacation Builds Your Career" or something like that, because that's such a good point.
I like
Um,
that.
but I want to hear more about what the VP role looks like, because traditionally it's a fairly heavy execution role where you're sort of growing to begin to focus on client coverage and sourcing. And so, what's that balance look like? Where historically you've probably almost been entirely execution focused, and then now you're really building a skill set of client development and relationships.
It's very true, and everybody says that not every great investment banking analyst makes for a great investment banking MD, right? Those are,
Hmm.
are very different roles, and you should think about them as being different. It's a function of becoming more polished over time, becoming more kind of client facing and client friendly, and I think first and most important is as an analyst and an associate, and even as a VP, I think you should think of those as being like quote unquote free years.
Hmm.
Meaning these are years you don't have to justify your existence by sourcing, right?
Yeah,
For the most part, maybe this depends on the organization that you're in, but these are free years of developing relationships with other people's clients, right?
yep.
Where you'll work on transactions that are being sourced by your MD or whoever it is at your firm,
Hmm.
um, and you'll develop relationships with those people over time. They'll grow in the firm, you'll grow in the firm, and those are your key reputation building years, right? And I think
Hmm.
this is
Hmm.
particularly true as you start to be the deal or execution lead for some of the transactions that you work on, where your work becomes your branding, right? And the
Hmm.
clients that you
Hmm.
work with, they start to it's happened many times where a client will come back to want to do more business with us, and actually the first person that they reach out to might be you.
Yeah.
That's extremely exciting.
Yeah.
Um, and yeah, and so yeah, I think as you start to take on more client coverage, start to take on more sourcing roles, I think it's like a frog being boiled in water, and it just slowly happens. And I know I've had instances where I've been able to be the kind of first point of connection for
Hmm.
transactions, and even very large transactions
Hmm.
that Jefferies ends
Hmm.
up taking on as mandates. And a lot of that really comes from what I was saying earlier about trying to be clients first, providing
Hmm.
advice. I think there was one specific example where we had a client who felt like other brokers were telling them, maybe some advice that would benefit them. Whereas, I and they felt like I was giving advice that was just more generally helpful for them in a long term way, and they ended up going with Jefferies as their advisor of choice. I think we were really
Hmm.
happy about that, and ultimately, like, really want to inculcate this feeling of clients are first always. It's a saying that Jefferies has, and we repeat it ad nauseum.
Fair enough. Fair enough. And so you're talking about this component of like you get 3 years of developing relationships, and then after that, like to some extent in this industry, you really do have to bring in clients, you have to bring in relationships, you have to bring in fees. Otherwise, they're gonna say like, "What are you doing here? Like your job isn't just to build an Excel model. Your job is to help us do deals."
Right.
And so that's a skill set that I think a lot of analysts like worry about. Because as you're saying, not all good analysts are good MDs. And if you want a career in finance, like you need to be able to source. And so when
Right.
I thought about this, when I was an undergrad, I actually ended up taking a sales job at a B2B SaaS company during my senior year of college so that I could dial and I could call people and I could email people and I could build relationships and like help them upsell. And so from your perspective and from your experience, like how do you think about developing that sourcing muscle? Like what does that whole process look like? And how can students who want to be successful managing directors in finance, not just successful analysts in finance, what do they need to do?
Definitely. I mean, I'd say that there's really two functions to sourcing. The first is reputational and reference
Mm-hmm.
sourcing, where you do an excellent job on your
Mm-hmm.
transactions. You build trust with your clients. They want to work with you, and when they're asked who to work with, they suggest you and they refer you. I think
Mm-hmm.
during for this audience, that's probably the primary focus for the kind of first portion of your career. Um, Now, for getting the job initially, I think it's maybe a little bit different, and there's more uh, of the second type, which I think really starts to become more applicable in the later VP years, SVP, director, principal, and then particularly as a managing director is where you are trying to bring in new relationships and make new relationships with potential clients. There's no perfect way of doing that, but these are sophisticated individuals, and dialing for dollars is a
Mm-hmm.
method that sometimes works, and I think you just have to
Mm-hmm.
figure out what works best for you as
Mm-hmm.
and it ties into how many deals you have going on and how busy you are and what your pipeline looks like, and um, but certainly over the course of your associate VP and beyond years, you need to think about growing that network very intentionally. It's
Yeah.
something that as I kind of transition upward, I need to continue to be focusing on even more.
Mm-hmm.
And yeah, it's really a key function of the investment banking role.
Mm-hmm. Gotcha. Okay. And so how do you do that? Because for me, like I was saying, I built my network and I built that skill set of like reaching out to people and dealing with rejection, frankly, by taking a sales job and getting rejected constantly and cold calling people and things like that. But like as a banker, how are you doing that today?
Yeah, and I've seen, yeah, and I think there's instances where that works really well. I have seen it go the other way in some cases where, particularly people that are a little bit junior,
Mm-hmm.
start, kind of wanting to participate more in sourcing and
Mm-hmm.
reach out, and in some cases can can put a bad taste in. You got to be careful about it, but the core function in your associate years, I think, is to build relationships, right?
Hmm.
And it's thinking, in every way possible, but most importantly in the transaction engagements that you have. How am I building relationships? Over time, I do think, I think there's industry events that you can go to. Uh, the buyer set is like the easiest group of people to
Hmm.
develop relationships with, because at least if you're in the secondary market, you're working with the same core group of buyers pretty frequently, and you want these people to be as close as your family members, right? Because these are the people who are going to be, you need to. And I've had this happen so many times where I have a deal that needs an extra 15 or 20 million for whatever consideration it is, and I need to call people and I need them to respond, and I need them to know that I'm calling with something real and it's not the boy who cried
Hmm.
wolf, because they've worked with me 4 dozen times, you know.
Hmm. Wow.
So yeah, I think it's a transition phase from building trusted relationships, building
Hmm.
buyer relationships, and over time building kind of seller relationships.
Yeah, yeah, yeah. Well, and I think that's an important reminder what you were just saying about like you want to work upward, you want to be able to work upward, but you've got to have judgment and you've got to be sure that you can do a really good job before you do that. Because sometimes it doesn't really matter if you're just like trying to take initiative. If you mess it up, you've messed up a relationship, you potentially messed up a multi-billion dollar deal and like tens of millions of dollars in fees for the bank. And so when we're talking about how to like work upwards, you've got to be pretty confident and you've got to be careful about that. And I'm sure I've made those mistakes too, hopefully in smaller ways that didn't cost us deals as I was an investment banker and working in private equity and whatnot. But I think that's a good note of caution because this is a serious industry. Like there's a lot of money at play here, and you can't afford to mess it up just by taking a risk until you're really ready to do so. And so, yeah, would love to hear a response on that, Carson.
Yeah, no, and I was just going to say, and this is also, I'm talking from the investment banking lens. I think as an
Hmm.
associate in private equity, oftentimes you're more encouraged, and it's even necessary to take on sourcing roles. Um,
Hmm.
so, and I wouldn't be surprised if some of the folks tuning into this end up going into private equity roles as associates, and do end up needing to spend a little bit more time dialing for dollars, and that being a productive use of their time.
Yeah, well, yeah, or dialing for dollars. Or these days, I feel like the dials are so much, especially enabled by AI, that we've seen that response rates are so low with cold outreach that you really have to be extraordinarily thoughtful in terms of how you do it. With our time running out here, I did just want to finish on this little chapter of talking about the VP transition by helping us understand what keeps you coming back. Like this is a hard job. You're working a lot of hours. Sometimes, like you're saying, you're closer with your clients than you are with your family almost. And this is an industry that requires some dedication. And yet it seems like you found your calling in a way that's really enabled you to succeed. And so, what keeps you coming back to investment banking?
Well, I think you need to find a way to be passionate about your role wherever you are, and all of the same things that people say about investment banking that are appealing are true for me. They like the paycheck. They like the working with smart people. I think all of that is very important. I know one thing that is important for me too is having an impact on the world.
Hmm.
Yeah, I guess one thing I wanted to clarify. I think a lot of people feel like you need to work directly in maybe a nonprofit organization, or
Hmm.
something that's fighting climate change or disease, or whatever it is, in order to
Yeah.
have an impact. The reality is you can also donate money, right? And and
Hmm.
many nonprofits, when asked the question, would you prefer to have would you prefer to have me as an employee, or would you prefer to have that same amount of money donated to you,
Interesting.
will prefer to have that same amount of money donated, right? And oftentimes you can make multiples of that,
Hmm.
by working directly in industry. So I think you want to think about ways to have an impact, if that's something that's important to you, in smart ways. And
Hmm.
for instance, I
Hmm.
know the value to save somebody's life from otherwise dying of malaria, for instance, is something to the tune of $5,000 a
Wow.
person, and that's with pretty conservative
5,000. Wow.
assumptions. So something to think about.
Yeah. Yeah, well, and that's extremely admirable, Carson, and it's great to hear that not only are you enjoying the job and the intellectual stimulation and the relationship building, but it sounds like you've been able to find a purpose in investment banking because it enables you to have a positive impact on the world. Whether that's through donating to highly effective charities or through using your capital and your ideas and your ability to improve the world in a way that like does impact people through other means. And so that's a pretty unique lens, and I really admire that you're able to find that, and I imagine that it makes it more fun and more interesting to get up every day and put in the hours required for investment banking. So with that, I know we're almost out of time here, and I have a few closing questions I like to rapid fire ask every person who comes on. And so I'm just going to ask these. I'd love to hear your quick response. What is the single highest ROI habit, technique, or routine you picked up on Wall Street that you still use today?
Yeah, I think maybe what comes to mind for me is starting each day with what is the hardest thing on my to-do list, or the thing that I least want to do, and then trying to do that thing immediately. It's an endorphin rush, and it feels very good if you do that. I don't always do that, but when I can make that happen, it feels quite good.
Okay, I love that. Second, if we looked at your calendar and your bank, your credit card statement from the last 30 days, what would you say you actually value?
I would probably say that I value family because I've spent an inordinate amount of time in the hospital and up at night with my new son. So just had a kid a week and a half ago, and that's been a huge joy.
Congratulations on that. That's incredible to be able to do that and banking. Okay, and what's the biggest risk that you've taken in your career? How did it pay off?
I think the biggest risk that I took in my career is, I was asked by a prospective client very directly if I could do this very large transaction that was going to be a ton of work. And when I was not altogether that senior, and I left at that and said, yes, I can do it, and we'll do a great job with it. And we since have done that, and it's paid off very well.
What's the most unconventional piece of advice you ever received that actually worked?
I'll have to see if I can remember the actual wording. I think it is uh, uh, anything that's worth doing is worth overdoing, and moderation is for cowards.
I love that. What's one habit that helps you perform well under the incredible pressure of investment banking?
Lots of deep breaths. Just continue to breathe. If you forget to breathe, everything's going to go downhill.
Yeah, breathing is important. It's the first rule of scuba diving. What's a lesson that you learned the hard way in investment banking?
Um, yeah, I think being too insensitive over email is. I
Hmm.
think you want to always be commercial and constructive, and try to not be too hard nosed. And I think I've learned that the hard way.
Yeah. What's a skill or quality that's actually more important in investment banking than most people think?
I think it's just being a regular, like likable person. I think you don't want to. This is a people business, and polish is important. But at the end of the day, you're just trying to establish real human relationships with both your team members and your clients, and that's really important.
And then, last but not least, copying a question from the How I Built This podcast, how much of your success in investment banking and your career do you think is due to your hard work and skill? And how much of it is due to luck?
Yeah, I mean, I think you need to acknowledge that at some point it's all 100% due to luck. Like if you were, I think the most important variable in what professional success you have in life is where you're born. So being born in the United States as a starting point is pretty important. Um,
Mm-hmm.
but over time, I mean, you'll get opportunities by luck that you have to take advantage of by skill or by your personality, um, uh, or plucky stick to itivism. And so, all things considered, I think it's a
Mm-hmm.
necessary combination of both, and you want to take advantage of the opportunities that are given to you.
Absolutely. Well, Carson, thank you so much for coming on the show here. It has been incredible to recap your career all the way from analyst through to associate and VP, learning about the PCA market, secondaries, and what Jefferies does within it. And again, this is an incredibly fast-growing market, an incredibly fast-growing bank within that market, and an incredibly fast-growing professional within that bank. And so we're truly lucky to benefit from your wisdom and learn a little bit more about the industry. Thank you so much for joining the show.
Thanks for having me on, Max. Appreciate it.